Credit Agricole's Daragh Maher joins us from London. He's the Deputy Head of Global Forex Strategy. So, Daragh, 139.18, why psychological here?
Yeah, 140 feels like it's been a key level for a while now. As you say, we did get above it earlier in the week, but I think the air is beginning to feel a bit thin up around here. And as you mentioned, the peripheral story, the Portuguese debt scenario, that's becoming a new point of focus. In fact, to the point I think where the simplistic attitude of the market towards the ECB rate hikes, ECB's hiking, we got to buy the euro, is one, well, hold on, is an ECB rate hike actually good news for the euro? Is it good news for the periphery? And that's why we're getting this kind of pullback and hovering still around this just sub 140 level.
Yeah, you've got European officials meeting later this week to talk about debt packages and bailouts. So within the next few days, you're worried about a pullback here?
Not necessarily. I mean, I think the market generally thinks this first summit, which was kind of thought up of at the last minute, we're not anticipating any kind of grand pronouncements from that one. Whether we get some kind of skirmishes on the fringes, that could be euro negative. I think the more important element for the market will be what happens at the end of the month, the March 24th summit, where, frankly, if they don't deliver something tangible there by way of progress, then I do think you get a more substantial retracement in euro. But I think they'd be forgiven if this coming Friday they said nothing. I think in a way that would be a good case outcome for the euro.
What does the substantial retracement mean?
Ooh, I think I've got a 125 year-end forecast. I think that's pretty substantial. But short term, anything around the 135.50 could be a knee-jerk reaction. If for example we get to the end of the month and they say, well, look, we haven't been able to agree on anything quite yet. We're still talking. We will do something, but be patient. I don't think this currency market is going to be much more patient. It's given them a month, 6 weeks already.
I mean, there's talk already about yet another round of stress tests on European banks. I mean, Europe's been out of the headlines, but it sounds like it's about to be right back in the crosshairs. What do you think of the credibility of yet another round of stress tests if the capital levels aren't agreed upon as a it's common standard?
Yeah, I mean, I think already a bit of cynicism appearing in the market about how tough these tests are going to be. Obviously, that was one of the criticisms levelled at the first round. The Irish banks passed, and yet two of them suddenly clearly struggled and continue to struggle. So, the authority is promising to be tough, but, already there's questions over how deep the GDP assumptions are in terms of the recession scenario, how deep the equity market fall, 15% this time rather than 20% the last time. We get more details on all of these kind of assumptions tail end of this week as well. I think that will be important. They have to be credible. Plus, they also have to say, well, look, if banks are in trouble on these measures, where's the money going to come from to recapitalize them? Is it going to be private? Is it going to be public? Or what's the share? That's where we need clarity.
You mentioned the Irish banks there. We just saw an election in Ireland. New Prime Minister who ran on a platform was saying he was going to help rejigger the bailout package as it stands. I mean, do we get to a point of nervousness once again where we see fluctuations day by day, worries once again about a default?
Yeah, I mean, I think it's certainly going to come back as a talking point for the market. As you say, we have a new Prime Minister. He's been elected with a very big majority, in particular in terms of coalition, and his mandate was, at least one leg of it, was renegotiation. So he has to kind of deliver on that in terms of at least pushing for some kind of better terms for Ireland. If the reaction in the rest of Europe was, well, absolutely no way, then that will become a point of focus for the euro. It'll definitely be a downside implication for the euro, because at the end of the day, what the market wants to see is agreement, is a path out of this crisis. If all we're seeing is conflict and disagreement, you'll sell it.
Is that dollar supportive?
Yeah, by default I think it is, because in a way the dollar I think has been weakening because it's been the flip side to ECB driven euro strength, to Bank of England driven sterling strength, and to Swiss and yen strength on the back of the North Africa and Middle East. Dollar's really, there's not been a view on the dollar, it's just kind of been the flip side to enthusiasm elsewhere. So if that fades, the dollar will rally.
All right, thank you very much, Daragh, for joining us.